Welcome to this video on the 2026 Senior Tax Deduction. This is a new stackable deduction that can reduce your taxable income by up to $12,000, but it has strict income phase-outs. Careful planning is essential before it expires in 2028. This is a stackable benefit available for tax years 2025 through 2028. Eligible seniors can receive a $6,000 deduction for single filers, or $12,000 for married couples filing jointly. This stacks on top of your standard deduction and the existing OVER 65 deduction, even if you itemize. The stacking works by combining your standard deduction, the existing OVER 65 deduction, and the new senior deduction. The new deduction adds up to $6,000 or $12,000 on top of the other existing deductions. There are three main rules to qualify. First, you must be 65 or older by the last day of the tax year. Second, a valid Social Security number is required. Third, you cannot use the married filing separately status to claim this benefit. Be aware of the income phase-out trap. For every dollar over the limit, you lose 6 cents of the deduction. For single filers, the full deduction ends at $175,000 in MAGI. For joint filers, it ends at $250,000. Even a modest extra income can push you into the phase-out zone. Several common retirement income sources count toward your modified adjusted gross income, or MAGI. These include required minimum distributions, which add directly to your MAGI, capital gains, and Roth conversions. Because this deduction is sensitive to your MAGI, proactive tax planning is critical. Staying below the phase-out threshold requires coordinating withdrawals, conversions, and distributions throughout the year, not just at tax time. A key strategy is using qualified charitable distributions, or QCDs. QCDs can satisfy your RMD requirement and keep that income off your tax return, helping to preserve your $6,000 to $12,000 deduction. Here are the key numbers at a glance. The maximum deduction is $6,000 for single filers and $12,000 for joint filers. The deduction expires after the 2028 tax year. The phase-out rate is 6 cents lost per $1 of MAGI over the income limit. The key takeaway is to plan ahead and not just react on April 15th. Review your MAGI, coordinate your distributions, and leverage QCDs to satisfy RMDs without inflating your MAGI.